Step 1. It's your stop. What's the purpose of a stop loss in the first place anyway? What are they there to do? It's to control your risk. So the operative word there is your. It's your stop, your account, your money, your trading style. So when you're thinking about stops, don't set out to try to mimic what other people are doing or trying to second guess where a particular person might place their stop. Forget about everyone else. This is your trade and therefore it's your stop, no one else's. Step 2. There's no right or wrong. Don't get sucked into thinking that there is a right or a wrong place to set your stop loss order. The best placed stop in the world will still get taken out regularly. Just because your stop got taken out does not mean that you had put it in the wrong place. Stops will get hit. We will have losing trades. Your stop loss's job is not to avoid getting taken out by price. Its job is to protect your account against catastrophic losses, first and foremost. So if it's done that job, it was a good stop. Step 3. Listen to the market. What does that mean? Well, if we've opened up a buy trade, for example, and we want price to move to the upside, we should pick a point on the chart where if price gets there, it's telling us something. When the market is telling us something, we would do well to listen. For example, say for instance during this buy trade, price moves below this low. If price does that, the market is telling us something. It is moving lower, not higher. A break below here is telling us that price is moving down, for now at least. So pick a point on the chart that if you are buying, price should not move below. Recent lows and highs are always a good choice for this. The market is telling us something when it breaks these levels, and when the market is telling us something, it is always advisable to listen. Step 4. Risk. Remember what stops do again? They control risk. So we need to think, how much of my account am I putting at risk here, and am I okay with that? Play price forward in your mind and imagine that your stop has just been hit. Assume that every trade you take is going to be a loser. Your stop will get hit, often. So don't try to block it out and pretend or hope that it's never going to happen, because it will. So what will your account look like? What impact will this loss have on your trading statistics? What impact will it have on your emotional state? Will this loss be a minor annoyance before you move on to the next trade? Or will it leave you an emotional and blubbering wreck, threatening to give up trading and announcing that you've discovered that the market is rigged and all of those other excuses that we come up with? If you're not happy with how things are going to look after your stop has been hit, you either have to reduce your position size or place your stop closer to current price, or perhaps a combination of both. The stop's job is to protect your account, so put it somewhere that gives it the best chance of doing this properly. Step 5. Reward. We all know that there are two sides to every trade. Risk, which we've just looked at, and reward. We want to make sure that the size of our stop fits in with our overall trading style. My own preference in trading is to target reward that is multiples of my risk. You might be different, but that's what works for me. So then it makes sense when we are looking at setting our stop that we take a look at our possible targets as well. So what are we targeting here? Where do we think price could realistically move to? Does that fit in with our overall risk-reward profile? Step 6. Decide. We have to decide, after taking all of the above factors into consideration, where on balance is the best place to set our stop. For example, when we go shopping for a new pair of jeans, we have a few things to consider: price, style, colour, durability, fit, and so on. One pair of jeans might be very cheap, but they might pinch you in uncomfortable places. Another pair might look and feel fantastic, but they may cost more than our monthly mortgage payment. There is no definitive answer to the question of which jeans to buy. All we can ever do is weigh up all of the considerations, the criteria that are important to us, and make the best decision we can based on our own individual circumstances. It's precisely the same with stops. Consider the points that we've spoken about in this video, weigh everything up and decide how best to put our stop together, how it will work best for us. If we could do all that, our stops will be very smart stops. They'll still get hit, no doubt about that, but they'll be doing the job that they are there to do and doing it very well. See you soon.